Tesla stock has had the worst drop since 2025 with a 16% red day from earnings. Google also joins the club, being down 7.5% after their earnings reports. Trump threatens Iran, saying US is close to a quote-unquote massive attack, bigger and better than ever before. Meanwhile, tech and AI rallied to begin the week but sold off the last few trading days. The United States have attacked Iran for 13 nights in a row. In all this chaos, should we expect the markets to drop into this week, or the buyers propel price higher once again? Today we analyze the market news, technical analysis, and the top stocks to watch into this week.
Welcome back to StockWatch. This week, AI and tech finally shows signs of positivity, but giving up a lot of these gains towards the end of the week. Tesla dropped sharply by roughly 12 to 15% following its second quarter earnings report, marking the most severe post-earnings plunge since early 2025. Panic seems to be at every angle, with oil also skyrocketing, which higher oil prices can increase inflation pressure, delay future Fed rate cuts, and benefit energy stocks.
With major Middle Eastern tensions going on right now, we do get a slight sigh of relief as the United States has ended the 13-day streak of US attacking Iran. It's definitely not something to celebrate, but it's a good thing we didn't continue to add to that number for the 14th straight night in a row.
The S&P 500 had seen a lot of pressure towards the end of the week. We had seen that gap down in which we seen a doji candle. Then we have buyers trying to press up and fill this gap. Very well defended with that inverse green hammer candle. Seeing the sellers really pick up some steam after we were holding tightly, condensing above that 750. We gap down, try to push up. 750 turns back to resistance, pushing down 2 gap downs as of recent times, and now defending this second gap. So technically speaking, we were very much leveling out here, looking for an energy building phase to then pop to the upside and find prices go past these all-time high levels right around that 759. And the sellers did end up winning this battle. So given all of this pressure in the market with a very steep trend at the moment, you would be looking at potentially a retest of this bottom support level if the buyers don't step in soon and fill this gap. We look on the weekly, you see how back and forth this is now. We are seeing energy build up after a massive rally, just like we saw in the past. Some condensed range here, an attempted breakdown, a giant move out, and now a more volatile range building up here.
Nice breakdown, Ian. Yeah, so we're now going to move over towards QQQ, and straight off the get-go, that bearish divergence is continuing, right? We're seeing QQQ here much more beat up from those $750 all-time highs all the way down at 684 with a very bearish close. Now, we mentioned last week that we're on that key support level, ending with that awkward green candle, and there is a good chance we push up to this ascending trend line for that pennant structure, and ultimately that was what occurred, right? We pressed to that level, showed a couple indecisive candles, sold off with bearish news, and really ended the week quite fragile here. You know, we did break that 696 level, although there is some very minor support around that $682 zone. With that very minor support here, that is the last leg. There is a clear gap to fill, you know, and this one is definitely rounding out here for a rounding top structure where you start to see price action just start to round over the top, reaching back where it all started to round over. And if you break that, usually there's another big movement to the downside here. And as of right now, this is quite a technical structure for some bad news. Got to lean bearish here on QQQ.
Looking at the weekly of IWM, we have now seen 4 red weeks in a row, a lot of them indecisive, however, and with the previous week being more seller dominated. We saw a top out around $300. Since then, price had a tougher time being that psychological dollar spot. We had tried to get a bounce right where we closed around over the last couple of weeks, right? Seeing a red hammer candle, pressing up, pulling back down to around that low, pressing up, and another indecisive week, and now we've closed right where we were breaking out at. So the sellers are trying to press that narrative to the downside at the moment, however still holding its gains quite well here as we see pictured on the weekly.
Yeah, and on the daily analysis, and we do see a very clear higher low trend pulling back to that ascending trend line, pressing up higher here, and some pretty timid price action. You know, we've been sitting around that trend line here for about 2 weeks. Pretty indecisive around that $290 support level, which really is a must-hold level here, especially when you factor in we also see that same rounding top effect which also translate towards S&P and QQQ.
Getting into sector performance, the sectors that led this week were financial stocks and oil stocks. Oil stocks, of course, because of the tensions increasing between US and Iran, seeming to really pick up, skyrocketing oil this week.
The biggest lagging sectors this week were software infrastructure, Palantir, Oracle, CrowdStrike. A lot of these names have come back to earth, with some of them that were already on the downtrend taking that much more of a hit. Also, internet retail is getting hit very hard. A couple of the top stocks in that list: Amazon, DoorDash, eBay, etc. One of these continue to rotate, and coming to this week, there was a bit of life for a lot of these names across the board, but ending the week with a strong sell-off, rotating into oil.
And for next week's events, lock in your charts because Wednesday's FOMC meeting is the biggest market maker or breaker of the summer. The Fed drops its interest rate decision, but the real macro chaos starts with the newly appointed Fed chair, Kevin Warsh. Expect immediate, brutal volatility across the bond and tech sectors because there's no dot plot this meeting, and Warsh explicitly refuses to handhold the market with forward guidance. So StockWatch market score this week, we're giving a 3 out of 10 just because there's a ton of fundamental factors going on. The war absolutely intensifying, FOMC meetings coming up, and technicals, especially on the S&P 500 and QQQ, the Nasdaq, closing this week in not ideal technical scenarios. So we have to lean overall bearish and indecisive for next week. Starting things off with the setups and predictions, we have ONDS finding a bit of a rally and now flagging out here on the hourly chart. Previously, ONDS has seen a lot of selling pressure. We did see a break and retest of this previous support level from a macro perspective. So we did see the sellers hold that control for quite a bit. However, we see a Morningstar pattern, red doji candle flip to green, and now we're seeing the price press up towards that 840 past support level. Although rejecting here off of this key level, we had seen over the last 4 trading days roughly 30% and holding tight towards that spot. So very quick retest mixed with getting into a flag pattern. A break of this trend line could cause a quick push up, and as long as ONDS can hold its ground over this past support level, you could see a nice flip into the stock trajectory.
Nice, Ian. Yeah, for my official prediction, we're going to go with QQQ to the downside. Now, the elephant in the room, we've seen a massive bearish divergence from QQQ to S&P 500, which is very rare. Jumping a SPY here, we still very clearly see higher lows. Still much stronger price action than Qs. We do have a couple of chinks in the armor, as Ian did mention, but all in all, jumping back to QQQ, we're seeing a lot of divergence here in a classic rounding top structure, which does set a very vulnerable chart here after that very massive movement up here. Now with the clean rounding top right at the neckline, if we get just a little bit more press here to the downside, taking out that support level at 682.20, there is a pretty nice gap to fill at 676. If we do zoom in here, that very, very small gap, if we do zoom in, is at your $676 level. So if we just see a little bit of oomph to crack the floor of the lows of Friday's action, very good chance, guys, we do come down and fill that gap here. And that is going to be the spot I'm looking at into this week. Now, I'm not absolutely in love with the setup. It's definitely one of those weeks, guys. I do think it's pretty wise to sit out, lower the size perhaps, but there is a very clear bearish rounding top structure with the gap to fill with a ton of Iran conflict. I do think this one is going to get hit, Ian.
Yeah, nice one, Dylan. That's a good pick. For this third one, we got Apple. Apple has seen some crazy relative strength, given that tech was really struggling this past week. We closed the week with an extremely nice green bar, closing at $333 for share price. Apple's been ripping up ever since pulling back to around 275 to 276. That acted as a bit of resistance, pressing up in a massive bull run, pulling back right around half of those gains, and then seeing some very volatile price action ensue into Apple, and then closing this week with a clean red thin hammer candle, looking like it has some more juice to squeeze out here. So Apple looking very prime and very impressive trading day to close the week. So we are short-term bullish to blow past those all-time highs. It would help if the overall market is on our side here. We know that US and Iran tensions are amplifying. However, this one's looking very primed and the relative strength is absolutely amazing and it cannot be ignored here. filling this gap in this one trading day and pushing up right around near those all-time highs. So what a week we have seen, and we're in store for an even crazier week coming up. If you guys enjoyed the stock market coverage and predictions, make sure to hit that subscribe button. Don't miss out on the next StockWatch upload. Hit that like button if you found that value today, and comment down below, what are you guys expecting going into next week? We appreciate you guys making it to the end of the video. Trade smart. We'll see you all in the next one.